Welcome to this training session on Orchestration Architect Mint, External Manufacturing Intermediate. To start with, I'm going to give an overview of supply chain management, then an introduction to external manufacturing orchestration, orchestration procure-to-pay, external manufacturing transaction phases, the planning phase, procurement phase, manufacturing and execution phase, receiving and inventory phase, finance and closure phase. So let's begin with a high-level overview of supply chain management to set the context for our session. Supply chain management is the end-to-end coordination of activities involved in sourcing raw materials, transforming them into finished goods, and delivering those goods to customers. It spans across planning, procurement, manufacturing, logistics, and finance. Today we'll explore how external manufacturing helps orchestrate these processes, leveraging transactions, workflows, and actionable insights to improve collaboration between life sciences companies and CMOs. From product flow to finance and information exchange, we'll discuss how digital solutions optimize these interactions to drive better outcomes. I'm going to walk you through the standard procure-to-pay flow, which is used as the baseline for external manufacturing. A procure-to-pay P2P process involves the entire cycle of purchasing goods or services, from the forecast planning to the final payment to the supplier. The buyer initiates with demand forecasting and PO issuance. The seller sends a PO acknowledgement and sends an ASN. Once the items are shipped, the seller sends an invoice. The buyer receives the inventory and the invoice and sends the remittance, i.e. payment. You have visibility into these transactions in the Mint UI. This slide offers a high-level view of how transactions are grouped by both process phase and flow type, information, product, or finance. This structure will help us better understand their sequence and purpose as we explore each transaction in detail later. Each of the orchestration subgroups have overlap in personnel and data shared. It's important to remember that many of the supply chain processes rely on data and action from other places for them to work smoothly. We encourage each organisation we collaborate with, internal teams and partners, to not only grasp their internal orchestrations but also understand those of their supply chain partners. In external manufacturing planning phase, we can reference the forecast plan response, planned orders, process orders, order status, and batch closures. Think of the forecast plan as your supply chain's early warning system. It's not a document, it's your way of saying to your supplier, here's what I'm going to need and when I'll likely need it. You're essentially laying down a roadmap of anticipated demand and release schedules for pharmaceutical products, giving your partner a head start to align production and distribution. Here's how it plays out. You, the buyer, send your forecast to your supplier, outlining what products you expect to need over the upcoming weeks or months. Your supplier takes that insight and starts shaping their production and release schedules to match. As time rolls forward, demand evolves. The initial forecast isn't set in stone. You can fine-tune it. Purchase orders, POs, get adjusted up or down based on real-world demand or changing inventory levels. And your supplier does the same, flexing their production plan to stay in sync with your needs. The result? Smarter planning, fewer disruptions, and a partnership that is proactive rather than reactive, reducing costly last-minute adjustments. Now the forecast plan response is a step where your trade partner responds to that forecast. The supplier, via the forecast plan response, can inform the buyer of their plan to commit to the forecast, offer changes based on capacity constraints or material shortages, or reject the forecast and request a rework. Forecasting is an iterative process where a miss could mean disaster for the buyer and supplier. A planned order is a system-generated recommendation created by enterprise resource planning ERP systems like SAP or APS Advanced Planning Systems to signal the anticipated need to manufacture or procure a specific quantity of a product, such as a pharmaceutical finished good or raw material, at a specific time in the future. These orders are not yet firm, but serve as proactive planning signals to ensure supply, continuity, and production readiness. The key benefits of planned orders are proactive supply planning, helps organizations anticipate material or product needs before shortages occur. Improved inventory management reduces the risk of overstocking or stockouts by aligning supply with demand. Enhanced production scheduling enables better coordination of manufacturing resources and timelines. A process order is a structured instruction set used primarily in process manufacturing industries such as pharmaceuticals, chemicals, food, and beverage, where production involves formulas or recipes rather than discrete parts. It manages and controls the transformation of raw materials into finished goods through operations like mixing, blending, heating, or fermenting. In an ERP system, a process order acts as a digital production blueprint, capturing all critical details such as production steps, timelines, equipment usage, material consumption, and quality checks. It ensures that every batch is produced consistently, efficiently, and in compliance with regulatory standards. Think of an order status report like the package tracking system you use when ordering something online. Just like how you receive updates when your package is order confirmed, being packed, shipped, in transit, delivered. An order status report gives buyers, suppliers, and CMOs similar visibility into the status of a purchase order as it moves through the supply chain. It helps everyone know where the order is, what's coming next, and whether there are any delays or issues, without needing to constantly ask for updates. Batch closure marks the formal completion of all activities related to the manufacturing of a specific batch. This includes the execution of final production steps, quality control testing, review of deviations, if any, and approval of all required documentation, for example, batch manufacturing record or electronic batch record. Once a batch is closed, it is considered finalized, meaning no further changes or edits can be made. All data is locked for compliance and audit purposes. The batch is now eligible for packaging, release, shipping, or distribution. So far, we've covered some key supply chain transactions, but how do you see this in the Mint user interface? The menu items on the left control based on the roles assigned to a user. Users typically have roles linked to a specific orchestration and perspective, allowing them to create, view, and interact with only those transactions. There is also a special role that provides a list view of all B2B transactions. This broader access is useful for administrators or monitoring personnel who need full visibility across all transactions. The roles can either have full access to create and edit or have view-only permissions. This flexibility allows team members to collaborate effectively while maintaining control over sensitive information. By assigning appropriate permissions, you can ensure that everyone has the access they need to perform their tasks efficiently. This is how all the B2B transactions will look with the All Transactions Owner admin role. This allows you to view all B2B transactions in a list view. Think of this as your control panel, giving you a complete overview of transactions. In the following demo, we will see how to navigate to this view and manufacturing orchestration view. Navigate to the main menu, My Networks, select Mint External Manufacturing, and go. Under the Manufacturing Customer menu, you can see all the transactions listed here. For example, purchase orders, purchase order acts, invoices, inventory balances. We have full access to the transactions. On the partner side, they'll also have full access to the transactions. We'll now take a look at the procurement phase. In the external manufacturing procurement phase, we can reference purchase order, and PO acknowledgement. A purchase order is a formal request sent by the buyer to the supplier to procure goods. It clearly specifies what the buyer wants to purchase, including the type of product, the quantity, and the price that has been agreed upon. Of course, we all know what a purchase order is, but maybe your partner calls it a sales order, and they need to match every detail to ensure they fulfill it perfectly. Digitalizing purchase orders with Mint helps you reduce errors that a manual process would cause because the data is properly transformed in and out of the system to ensure consistency. Sometimes PO information has to be entered into more than one place, which can increase potential for errors. Using Mint ensures the PO is sent to a company rather than a specific person who may lose the PO in their inbox or be on vacation. The PO acknowledgement is a formal response from the supplier confirming that they've received the PO, outlining whether they accept the order as is, reject it, or propose changes, such as updated delivery dates or pricing. This is a collaboration to ensure everybody is on the same page with expectations for quantities and delivery dates. Let's now take a look at how to send a PO in the UI. Navigate to Purchase Orders and click on Add New. Close the side panel to give more space. Enter a purchase order number and save. Click on Edit to add more details. Change the process status to Submitted and enter any necessary information. For the custom supplier, this information is already set up in master data, so when you enter the entity's name, it will populate the rest of the address details as per master data information. Optionally, you can enter the ship to and bill to location. Click on Add New to enter a new line item. Select the product, unit price, net price, quantity, unit of measure, and select Apply. The new line item will then appear here. Once you're happy with the information, scroll to the top and move to Submit, then click Save. This will then send the purchase order to your partner. I'm now going to show you what it looks like on the partner side and how to create a purchase order ACK from a purchase order. I've selected the correct network, and then you go to Manufacturing Supplier Purchase Orders. I'm just going to close this panel, and here's the purchase order that I've just received. Click into it, and to create a PO ACK from a purchase order, select PO ACK here and apply. This will then copy the PO information and create a PO ACK from it. Open the panel again and go to Purchase Order Acknowledgements. Here is the purchase order ACK that's been created from the purchase order. Select it, click Edit, and change the process status to Submitted. Then save. This will then send back the PO ACK to the customer. Let's now take a look at the manufacturing and execution phase. In the manufacturing and execution phase, we can reference batch creation, material issued, material consumed, and material produced. Once the forecast plan response is reviewed, the next step is to translate that demand into actual production and product flow. This brings us to batch creation, where we define how products will be manufactured based on forecasted needs. Batch creation data captures critical information such as batch number, production date, expiration date, ingredients, quality control results, and storage conditions. Suppliers use the batch creation information to verify product authenticity, check expiry dates, and ensure compliance. This data also helps track and manage inventory at the batch level. Batch creation also sets the stage for tracking progress and monitoring resource usage throughout the production lifecycle. It helps production teams stay aligned with planning, supports efficient execution, and minimizes the risk of errors due to missing or incorrect information. In this slide, we discuss the concept of material issued. This refers to the process where raw materials or components are withdrawn from inventory and moved to the production floor on another operational process. This transaction is typically recorded to maintain accurate inventory levels and ensure traceability. It's a critical step because it directly affects inventory valuation and cost tracking in manufacturing. Imagine a chef in the kitchen. They take out 10 tomatoes, but only end up using 8. The remaining 2 are either spoiled or discharged during preparation. The 8 that go into the dish represent material consumed, the actual amount used in production. Material consumed refers to the actual quantity of material used in the manufacturing process. This may not always match the amount issued due to factors such as scrap, rework, or operational inefficiencies. Accurate tracking of consumption is essential for understanding efficiency, reducing waste, and calculating the true cost of what we're making. It also helps identify areas for process improvement and waste reduction. The next step in this chain is material produced, which refers to the output of the production process, either finished goods or semi-finished items. These are recorded in systems like ERP once production is complete. This transaction updates inventory, often triggers quality inspection processes, and initiates the next steps like packaging or shipping. It's a critical point for maintaining supply chain visibility and ensuring customer order fulfillment. Now on to receiving and inventory phase. In the external manufacturing receiving and inventory phase, we will take a look at advanced ship notices, receiving advance acceptances, inventory balances, and inventory updates. Imagine getting a text that your food delivery is 10 minutes away. That's what an advanced shipment notice is for the supply chain. It's an electronic document that notifies the buyer about the shipment of goods before they arrive. It typically includes detailed information about the shipment, such as the contents, quantities, expected delivery date, and tracking details. This early visibility helps you prepare, allocate space, schedule labor, and avoid surprises. ASN is the bridge between shipping and receiving, keeping both sides in sync. Picture the moment you open a package and check if everything's inside and intact. That's receiving advice in a business context. Receiving advice marks the formal acknowledgement that goods have arrived at your destination. Receiving advice marks the formal acknowledgement that goods have arrived at your destination. It confirms that the shipment has arrived, matches the ASN, and is in acceptable condition. This transaction is the handshake between the buyer and the supplier. It says, yes, we got it and it's good. It ensures accountability and accurate record keeping in the receiving process. It's the real-time snapshot of what you actually have in stock, raw materials, work in process, or finished goods. The inventory balance is a two-way communication channel for exchanging information about on-hand inventory levels. The buyer or supplier can initiate this transaction to inquire or inform. Why does it matter? Because it powers everything: production planning, order fulfillment, procurement decisions, and customer promises. Too much inventory? You're trying to cash up. Too little? You risk delays. A healthy inventory balance is like a steady pulse. It keeps the supply chain alive and thriving. An inventory update is an electronic document used to notify trading partners about adjustments made to inventory levels within a warehouse or distribution centre. This is particularly important when accurate inventory tracking is vital for regulatory compliance, product availability, and patient safety. Suppliers will initiate this transaction when inventory levels are adjusted due to reasons like receiving new stock, shipping out orders, damage, expiration, or recalls. Buyers use the information in the inventory adjustment to update their own inventory records, ensuring they have accurate information on product availability. And finally, the finance and closure phase. In the external manufacturing financial flow, we see a relationship between invoice and remittance advice transactions. The buyer and seller have already done their part. Products ordered, shipped, and received. Everything's running smoothly. Now it's time for the seller to get paid. An invoice is the formal document that sellers send to buyers to request payment for the goods or services they've delivered. It includes key details such as item descriptions, quantities, prices, tax, total amount due, and payment terms. With Mint, invoices are sent directly from system to system. No PDFs, no emails, no manual data entry. This speeds up processing, reduces errors, and ensures payments are made on time. The buyer just made a payment, and now they need to let the seller know exactly what was paid and why. That's what the remittance advice does. It's not just a payment notification. It's a detailed breakdown that clears up exactly what invoices or purchase orders were settled. It typically includes details such as invoice numbers, amounts paid, and payment method. By digitizing the exchange in Mint, buyers can easily streamline their accounts payable process, while sellers can quickly see which invoices have been paid and for how much. Sellers can reconcile payments faster, identify discrepancies instantly, and keep their accounts receivable on point. In closing, the end-to-end orchestration of transactions listed provide timely and robust information sharing to ensure the supply chain manufactures goods as needed and in minimal excess. Here are some key takeaways for you to think about. Understand your possibilities. Discover the range of transactions you can leverage to optimize your processes. Identify your priorities. Reflect on which transactions align best with your current needs and goals. Start planning. Begin mapping out how and when to implement these transactions in your workflows. Envision the impact. Consider how streamlining transactions can improve collaboration, reduce errors, and enhance efficiency. Thank you for your time watching this training session today. If you have any questions, please feel free to email tracinguniversity@tracing.com.